Russia has invaded Ukraine. In this video, I'll be talking about the two ways that will most affect the Australian economy and therefore consequentially most affect property market in Australia. Okay, so if you're kind of fearful of what's going on overseas, you're not really sure if it has any impact or a lot of impact or what impact on your investments, your property, your home, or your aspiration to buy property in Australia, and are curious what actually will happen macroeconomically and microeconomically, then carry on watching. Okay guys, my name's PK and I help people build passive income using data, using the Property Investment Accelerator without needing to plonk down $15,000 on buyer's agents every single time. If you get value out of this channel, which talks about economics in Australia globally, talks about property market, real estate, how to get ahead, then hit subscribe, especially if you're new. Give it a like, give it a thumbs up, I should say, that way. It really gives me value. So it's a complex topic, okay? I'm going to talk about two ways about how the property market will be impacted because of this Ukraine war, this Russian-Ukraine war. And I should just start off by saying that nothing I'm talking about is going to be from a social demographic perspective. I'm not qualified to talk about that, okay? Prayers go out to obviously everyone affected. I'll be talking specifically and exclusively from an economic perspective, putting my macroeconomic hat on. So what's happened, I think you all know, but what's happened is that for years and years, for over a decade, post the breakup of the Soviet Union, Ukraine is the biggest state that detached itself from Russia post 1991, Gorbachev, Soviet USSR era ending, and NATO, especially US, has been lobbying for a long time for Ukraine to be part of NATO so that, I don't want to put words in anyone's mouth, so that they can become a little bit better tactically and strategically placed alongside Russia to, let's say be a bit more aggressive or a bit more better defensive. Russia doesn't like that. It considers Ukraine as a really important strategic foothold. It has lots of iron ore, lots of resources, and it basically wants Ukraine back. Okay, 2014, it took Crimea back to a large extent, and now Russia has finally invaded Ukraine. And from what it looks like is, for all intents and purposes, it wants to have it part of the Russian Federation again. So, huge sort of wars going on, obviously really bad. The economic impact. For me to explain the two biggest ways in which it will affect your property, my property, our Australian residential real estate market, I just need to paint a little bit of a picture, okay? So just bear with me. It's a bit of a complex topic. I'll try to explain it to the best of my ability. So the first thing I'll say is that in any crisis, economic projections, forecasts, balance always prevails. And these days on Facebook, YouTube, media headlines, everyone wants to, big up a recession, or interest rates will rise too much, there'll be a recession, that's when I'm going to buy a property. Or they say, interest rates are going to stay low forever, there's going to be a property boom forever, or it's always a good time to buy a property anywhere you want with a blindfold. Really understand that balance prevails. The reality is not on the extremes, it's somewhere in the middle. So the curtain or the backdrop, no pun intended with Iron Curtain, but the curtain or the backdrop in which I want you to understand the two ways property will be affected is, here's the backdrop, okay? So the West can't really do much or do too much to Russia because it's not invading a NATO country, number one. And number two is that it's a reliance on gas. Okay, now we may not feel it directly here in Australia, but I can tell you Western Europe or Central Europe, without Russian Gazprom, gas pipelines, Nord Stream 1, you can't survive the winter without importing gas from Russia. If Russia decides to turn off its taps to Western Europe, which it has no incentive to do so because that's its key primary export, but if that export is affected or supply is limited, then what happens? Prices go up, okay? When prices go up, that creates inflation, all right? Gas, energy costs are obviously a key component of CPI or inflation. So it's very interesting. Trump came out and said that Putin's move was actually very intelligent. Why did he say that? He's saying that because he knows that Putin knows that the West can't do anything. They kind of need the Russian Federation to import energy from them, gas from them. So they kind of will shoot themselves in the foot if they're too aggressive versus Russia right now. Okay, that's kind of one aspect. Now look, commodity prices, they're already high. Okay, oil, wheat, iron ore, all this stuff is already high. And oil and gas constitutes about 50% of the Russian economy and its exports into Western Europe. So it's a huge proportion of the Russian Federation. And what's happening is right now, oil stocks are already low. Gas stocks are already low. Prices are already higher. And the key concern from the West, UK, Australia, New Zealand, Canada, US, Western Europe, is that this crisis will increase the price of oil and gas further. Why is that bad? Because inflation will rise. Okay, and if wages aren't keeping up, then it's you and me, people who live in the West that think we're isolated from Russia and this conflict, but actually impacts us because our bills rise. And so therefore there's not a huge positive sentiment from Western democracies for their governments to do anything about it, or to do too much about it, I should say. Because if Russia is invaded by the US, I'm just taking a really extreme example, energy costs are going to just flip through the roof. Okay, no one wants that. So Western governments are sort of handcuffed in their ability to do much about it. They don't have the public on their side to take a serious stance. Okay, and everyone's saying the sanctions may do something, but it's probably not going to be enough, because remember, Russia can get most of what it needs through the back door through somewhere like China. Okay, so that's the backdrop that I needed you to understand, to now tell you the two things in which or by which property prices in Australia will be impacted. Number one, stagflation. Okay, stagflation is a concept in macroeconomics where you've got inflation rising just really, really high beyond what we want it to. Therefore, it's harder for us to afford things if wages don't increase. And at the same time, unemployment is going up. Okay, so the real economy, jobs are down, unemployment is up, wages aren't increasing, but inflation is increasing. That's called stagflation. Okay, and that's why there is not public sentiment for war. Because if inflation rises due to energy costs rising, but real wages aren't going anywhere, then we're all worse off. Okay, we're all worse off. What does this mean? In 1973, there was the oil crisis. That crisis created this exact phenomenon, the stagnation. And the really important thing to consider here is, in a stagnation scenario, monetary policy is useless. Okay, if the economy is suffering, but inflation is going really high, you don't want to increase interest rates, because those interest rates aren't going to bring back the cost of energy, because that's due to a foreign environment. It's due to imports. It's due to global money markets, global commodity prices. Australia can't impact that. Okay, so by increasing local interest rates in Australia, that's not going to rein in inflation. But what it will do is it will further dampen, further destroy the economy. So in a stagnation scenario where you've got inflation running wild and the economy doing really poorly because people can't afford the things that they used to, because wage growth isn't happening but inflation is high, by increasing interest rates, you're just destroying your economy, and it's not actually fixing inflation, because that's a foreign phenomenon. Okay, do you understand where I'm going with this? So what is likely to happen or could happen is that Reserve Bank will push out or dilute its planned interest rate increases to make sure that it doesn't create a stagnation type scenario, or that when a stagnation type scenario does come to Australia 6 months, 12 months, 18 months from now, it hasn't sort of destroyed the economy leading up to it, because it needs the economy to be very strong if this war extends out, protracts out. I hope that makes sense. So the point number one, the way that this Russian war impacts Australian property prices is interest rates stay lower for longer, or don't increase as fast or as high as they ought to or would have had it not been for the war. The second way that property prices are impacted in Australia is that this is, generally speaking, a risk-off event. When investors, you and me, mums and dads, we are, globally I'm speaking here, we're positive about the future, everything is stable, we invest in things. When we're not positive about the future, when we think that inflation is rising too much, our wages aren't increasing, unemployment is increasing, all this kind of bad stuff, the economy is about to go into a recession, we don't invest in stuff. We take our money, we put it under the proverbial mattress. And what that means in real terms is that we buy gold, okay? We go to safe havens like gold, basically non-investment assets, okay? So we go to things like that. Now, housing, real estate is very interesting because it's actually not an investment asset. The majority of houses, most places around the world, definitely in Australia, are not an investment asset. It's where you live, okay? And when people are in a risk-off event, they don't sell their house. That's the last thing they'd want to do. They need at least some stability, at least at home, okay? So they don't sell their house. What that means is that house prices don't fall, because if there's no supply, prices can't fall. They can only go up, or even if they don't go up, they just go flat. So that's one thing to understand. The stock market crashed. I think different indices are different, but the highest one was 4% crash in the last 24 hours. The money is transferred to gold, it's transferred to fixed income, it's transferred to bonds, government bonds, it's transferred to cash, and it's transferred to residential real estate. These are safe assets, okay? You can see them, you can touch them, they have intrinsic value. Something like Bitcoin doesn't have any intrinsic value. Something like a share or a stock in a company doesn't doesn't have substantial intrinsic value. It's speculative. At least this is what investors and people think in a risk-off event. Okay, so generally speaking, property is an asset class that people investors flock to globally and in Australia in a risk-off event. When something like this is happening, they're not sure how the world's going to be, there's uncertainty, they go to property. But the caveat to that is they do not go to commercial property, because commercial property is linked, right? Commercial property is linked to trade, okay? And if trade is not occurring due to stagflation, okay, because inflation is so high but the economy is really bad, commercial property is hit the hardest, okay, not residential property. So resi property, which is, has substantial value, intrinsic value. Commercial property is based on the tenant, the commercial, the economics, the commerce side of things, which is poor because it's a poor economy. People go to residential, okay? So these two reasons are why the property market, I feel, based on my macroeconomic analysis, is not going to be impacted. Of course, balance, it's not that it's not going to be impacted at all, nor is it going to boom all of a sudden further because interest rates aren't going to rise as much. Balance is the key word. But there is a floor under property prices because interest rates are going to be lower for longer, and also residential real estate property is a safe haven. And the thing is, the economy may suffer a little bit, okay? The economy may suffer a little bit because energy prices, oil prices, gas prices increase, right? That causes inflation, but also oil is a key component of costs for business. And if that cost is increasing, businesses make less money, they invest less, therefore GDP doesn't rise. Therefore, we have a poorer economy. That's stagflation. In that environment, like I said in point number one, interest rates stay lower for longer, therefore putting a floor under property prices. So look, that was it, guys. Tell me what your thoughts are. I'm not going to pretend to be able to predict the future, especially not something so unpredictable as a war. If you look at previous wars gone by, after the event, they're normally good for the economy, they're normally good for property prices, but, I want to say nothing good comes from a war, so from a social demographic perspective. So prayers with everyone that is involved. Guys, what are your thoughts? Leave a comment below, give it a like, give it a subscribe. And if you want me to produce more videos on this Russian crisis, how it impacts Australian economics, how it impacts the economy, how it impacts residential real estate in Australia, leave a yes below, and then I can sort of, create a series if you guys are interested. My name's PK, and look, that was a complex topic. Thanks for staying with me. Hopefully that brought you value. Catch you later. Bye.